Welcome to the Alpha Mind podcast with me, Stephen Goldstein, and my co-host, Mark Randall. In this podcast, we hold fascinating conversations with people from the world of financial markets and from related areas. In this series, we delve into the lives and stories of extraordinary guests whose experiences give us a fresh and powerful lens through which to understand the mental, emotional, psychological and behavioural challenges people face when encountering risk, uncertainty and complexity within financial markets. Our guest today is Denise Shull. Denise is a performance coach and former trader who uses neuroeconomics and modern psychoanalysis in her work with hedge funds and professional athletes. Denise focuses on the positive contribution of feelings and emotions in high-pressure decision-making situations. Here are a few clips from the podcast.
First of all, you can never have the right psychology for trading unless you've learned how to trade. So it's illogical from that point of view. But it's also true, you can have the best system in the world. And if you don't have a psychological capital, they go hand and you have to have both. People started telling their stories and I couldn't help but hear how their life story and how they came to be, like the way they think they should approach the world, like sort of their philosophies of life would play themselves out in their market decisions. I have a hedge fund guy who tends to be rebellious. And so when the market's not going his way, he has to be conscious of his innate tendency to rebel, or else he's going to get bigger in losing positions. If anyone talks about what's so hard, whether it's trading or sport, they'll say the mental side of it. They'll say the confidence. So the thing that basically everyone admits is the difference. Is the thing that at the same time, people are afraid to ask for help.
Before I play this podcast, just a quick word to let you know that this podcast was recorded on the 21st of February. Now that was a very different world. The stock market was just close to its all-time highs. Coronavirus hadn't really moved far beyond countries such as China, South Korea, and a few cruise ships in Asia. As I say this now, on the 30th of March, it is quite unbelievable how the world has changed in that time. So there will not be any references to what's happened over the last few weeks. Anyway, before we start, just a quick thank you to our sponsor, the Society of Technical Analysts, the STA. It's worth pointing out that if you're interested in using this time in the markets, which for some people, they're going to be working from home, they're going to have time on their hands over the next few weeks. The STA, the Society of Technical Analysts, is the world's oldest body for the advancement of education in technical analysis. They run some brilliant courses, including home study courses, and much of their work is written by leading figures from the world of financial markets. You can find more about their work on their website, sta-uk.org. Anyway, without further ado, on with the podcast.
I'm Denise Shull. I'm now a performance coach as well as it seems like a decision and strategy advisor, because I have taken on clients where that piece of it is more important. How I got here, number one, I didn't plan it. Like one of my messages to people all the time is you never know where life is going to lead, because I started out selling computers for IBM and wanting to climb the corporate ladder. And I was actually sort of doing that. I was getting all these awards and getting promoted and supposed to go to business school. And then I thought, oh my gosh, if I go to business school and I'm selling computers when I'm 40, I am not going to be a happy camper. So I quit and went skiing for the winter in Aspen, and then managed to get myself into a graduate program at the University of Chicago, which again, like sort of public service announcement, is a really cool graduate program where you get to design your own course of study with a certain, minimum of research requirements. And it was called biopsychology then, but now it's called neuropsychoanalysis, meaning how does our brain cause us to do the same things over and over, basically? Then I thought I was going to get my PhD and become a researcher, maybe become a therapist, but probably become a researcher. And I literally was dating someone who was a floor trader. And the next thing I knew, we met somebody on a street in Chicago. They were going upstairs. And those guys had wanted me to come trade on the floor. And I thought, I'm not going down there waving my hands with you guys and whatever all that's about. And what the heck is a weather features seat? Because they were telling me I should buy one. I was like, yeah. So I took this hard right turn and became a trader. And then Tradered at a couple of places, one very back and forth. What's the word for that? It's escaping me. But not momentum, very scalpy, let's put it that way. And this is the 90s. This is 94. So I scalped for a while. I didn't scalp, and I said, this doesn't suit me. So I switched and went to Schoenfeld. Had the privilege to sit next to Dmitry Balyazny. Have not talked to him in the interim 25 years, but I did have the privilege to sit next to him and see him trade momentum and learn from. In any event, then I was trading, and someone asked me to come to New York to open a trading desk, and I did that, and I started studying modern psychoanalysis as a hobby, and sort of one thing led to another, and in that study I discovered that some scientists in 2003 had shown you have to have emotion to make a decision. And I was like, darn, like all this trading psychology, take the emotion out of it. From a brain point of view, if you could do that, you couldn't make a decision. And I was literally like, this is a problem.
And you became, so I gather, the inspiration for Wendy in the TV box set blockbuster Billions. Is that correct?
It appears to be correct. If you look at all of the data, which the public doesn't have all of the data, but if you look at all of the data, there ends up being really no other way to understand that. Now, what the public does know is that Andrew Ross Sorkin invited me in initially to work with Maggie, the actress. That rapidly turned into work with the writers. And then that actually rapidly turned into a whole marketing project that then somehow mysteriously never actually happened. But yeah, when it first came out, I didn't admit to having consulted. I didn't admit to it. And then what happened was I couldn't avoid it. Like everyone in New York was like, oh my gosh, this Wendy character is you. I had a journalist say, Denise, everyone knows it's you. So it was sort of after that when the journalist kept calling and I realized I kind of couldn't escape it, that I just told the truth, that I'd been invited to consult. And, over the years, they've deviated a little bit from, her character's gotten involved in all sorts of other things. And I'm not even referring to her personal life, but, the first couple of years, she was absolutely primarily a performance coach in hedge funds. Yeah. Season 1, if there's that Axe loses $400 and some million after his options guy, I think it was Maffei, told him not to do the trade or to get out of it, and Axe got stubborn, and then he and Wendy spend the whole evening like unraveling that. That's straight out of my book, if you ask me.
Okay. And you've also written, which is in my opinion one of the best books on trading mindset out there, Market Mind Games.
Well, first of all, thanks for the compliment. And yes, I did, right? Market Mind Games. After that, 2003, figure out emotion is related to trading decisions. I didn't get, however, at that point, that everything I'd learned about the unconscious and unconscious thoughts and feelings and motivators was going to apply. Like I thought it was just about helping traders parse their confidence and it being better working with the emotions they knew they had. And I ended up having an article published going back, and then people ended up asking me to coach them. And then I went to these psychoanalysts that I worked with and said, could you mentor me in coaching people? And then I started doing it, and people started telling their stories, and I couldn't help but hear how their life story and how they came to be, like the way they think they should approach the world, like sort of their philosophies of life would play themselves out in their market decisions. So basically in Market Mind Games, I explain that. And I honestly do believe that we have a fractal element in our personalities, that We have experiences, we learn things growing up that, to use the fractal analogy, but those are existing on a small scale, let's say, because there's something a child or a young person is learning. And then as that person grows up, that small scale thing, like a piece of broccoli, if you will, becomes a whole head of broccoli because they react in the same way in similar situations and basically unconsciously recreate the same situation. So then the market becomes this perfect partner in that, like a Rorschach blot, not to mix my metaphors, but I'm mixing my metaphors. Yeah, you can project anything onto it, right? It's an authority figure. Like I have a hedge fund guy who he knows that he tends to be rebellious. And so he's always been that way. And how he has to, when the market's not going his way, he has to be conscious of his innate tendency to rebel, or else he's going to get bigger in losing position. People will either project their own unconscious onto the market, and or they will try to work out their own unconscious. I've told this story a zillion times, but it's really, I'll tell it again. So I had a client in 2006, Chicago Board of Trade upstairs guy, called me, said, I lose $10,000 every morning, I make it back, and then I make $10,000 in the afternoon. So I'm up every day, $20,000 to $30,000. But this is ridiculous. I've been losing $10,000 every morning for like 3 years. Can you solve this problem? And basically, because I had training in psychoanalysis, meaning, what's really going on for this person, I said, tell me your life story. And they proceeded to tell me that they were born to a teenage mother who was on welfare and basically had a running coach adopt them, literally adopt, but, take them under their wing in school because he was a very fast runner. And then that led to him, getting a college scholarship for running and almost making the Olympics. So he had this life story, this sort of rags to riches life story. And I just say, I'm wondering if you're replaying your life story in everyday's trading. And I'm not kidding, he stopped. Like the next month he made $300,000. He went on a few months later to make $1 million a month. Because he just he was like, oh my gosh, I am. So at that point in time, I was not thinking that everything I'd learned about psychoanalysis and unconscious patterns was going to apply to my trader friends or my trader clients, both friends and clients. I mean, I kind of had an inkling maybe because the guy that had gotten me into the business was a really, really, really good tape reader, but he'd get these moments where he'd just blow a huge amount of money for no good reason. And you had to say, does he have some reason to sort of get stubborn and rebellious? And what's that really about? And I knew he had a really stern authoritarian father. But I honestly still, even though I had that inkling, was not focused on that aspect of it. People replay their stuff and the market's just, you can say it's doing anything to you.
Well, there's that very famous quote by Ed Sakota from Market Wizards. Everyone gets what they want from the market. Some people win by losing. Some people win by winning. Win or lose, everyone gets what they want from the market. I'm not sure if I quite quoted it correctly. And it's full of paradoxes. But yeah, I think it has always been, for me, the quote that captures this human side of what we're trying to do.
Totally. So I'm going to give you two examples, and they're actually two of the same example. Two very skilled traders, one very successful, long career of, working in an institution, very successful. The other former floor trader, successful, but then then both of them on the screen, right? Both of them having grown up in situations where their fathers were violent and, beat them up. And both of them having the same problem, that they could go along doing okay, but then something would happen and they would just completely lose it. And typically overtrade. They basically, what they were doing is getting into brawls with their fathers, fighting back. The market's, symbolically their father at that point, and they're just not going to take it. They're like, going to get bigger in the position, going to fight back. Now, of course, it never works out. But they have this unconscious need to fight back, to stand up for themselves, to, not be beaten up. Those, by the way, those two have been the hardest clients I've ever had to help them, because that need to stand up for themselves and fight back is so intense. I've had other clients with it, in that vein, or in, similar, but not like these two particular people were beaten up, physically.
Yes. Yeah.
So, and they lived with that growing up. So I've had other people, like I had another client who was a rugby player, and his natural tendency was to just fight back and get bigger. But he didn't have that level of abuse. So we were able to, was able to mitigate his fighting back a little bit more easily.
Denise, it's fascinating what you've just been saying. And, it's really interesting because we're recording this podcast in February, and it's going out sort of late March. That's when the people are listening to it now. And by the time it's out, we will have had 2 podcast interviews with a trader called David Tate, and he was head of proprietary trading at Goldman Sachs. He was one of the original portfolio managers at Blue Crest Capital, and then he was head of global macro FX at UBS, and then later head of global macro trading at Credit Suisse. But his backstory, which is really the story about his life, which has been made into this new film called Sulphur and White, is that he was abused as a child, sexually abused.
Unbelievable.
And he's the most incredible individual. He's as you would hear in the podcast, he's climbed Mount Everest on 5 separate occasions, and K2, to raise money for these charities in the UK that deal with child abuse.
Right.
And he's raised well over £2 million or $2 million to date, and hopefully with the release of this new film, which is also raising funds for those causes, that'll go up significantly. And he's quite happy to tell his story, but at one point, early in his trading career, he was only stopped from killing himself by the intervention of the police.
Oh my gosh.
But there's another side to it which came out in there, which he said as a trader he was fearless because of that. That nothing else in his life could ever be worse than what he experienced. And myself and another coach who I do work regularly with here in the UK, and he works in hedge funds, have spoken about this. We've noticed this, one of these patterns of how many hugely successful traders have got some sort of abuse in their background. Not all of them, but some. I wouldn't say abuse. That's not right, actually. Some sort of trauma in their background. Lost a parent, or lost a child, or perhaps lost a sibling at an early age, or some other trauma which is played out in their life. And because of it, for various reasons, they don't seem to have the same fear responses of us. They seem to have a wider tolerance for fear. And also another thing I've noticed is they don't really have a strong ego. It's almost like, or perhaps they don't have a strong ego is not right, but they're conscious that the world won't bend to their will or their ego. They've had so much, such big things go wrong in their life that whereas a lot of traders, the ego comes in and they're somehow that the opening that the market will bend to their will. These people are fully aware that the market will never bend to their will, and they seem to be more resilient because of that.
So they don't take it personally.
Absolutely. Park it, move on.
Well, they understand that it's like the ocean, and they have a surfboard, and the ocean's going to win unless they navigate exceptionally well. So they just know, I'm literally thinking out loud. So they would have just learned that, like, when, most of us grow up without like a sibling being killed, right? I mean, a lot of us grew up with our parents being critical or, our older brother being smarter or whatever, but that's a whole different experience than trauma as you use. And so, like, they would have had to figure out a way to cope with that. And that would have essentially made them grow up faster in very many ways, like be sensitive to risk, luck. And so they might be sort of more in the actual reality of
Yeah, yeah.
what the game
Well,
takes.
well, you talk about the game, it's a great analogy. If I was to try and think through this in terms of that analogy of the game, you have people who have walked through life and everything's been a path laid out for them. There's a lot of people into this business. They've done well at school, they've done well at college, they've done well at university, they got the interviews into the good jobs in the good banks or the good funds, and they've never really had anything disrupt the flow of their life. And then they come into this game called markets, and
Yeah.
you're at some point very early in this career, you realize this is insane. There is no A, B equals C in this world. You can have 10 ducks lined up in a row, and it will do completely the opposite. And hey, how do I cope with that? I'm not used to that. I'm not used to that world of uncertainty and complexity, and and it throws a lot of people out.
You can't predict it. You can't control it.
Yes.
You can't influence it. I mean, that's the thing that I always thought, that desire to influence it, or that unconscious belief you can influence it.
You're a victim of it all the time. You can only ever be a victim.
Right.
And
I think that, so with the people who have come from trauma, they've probably had to, if they've responded so that they're in a position, if it hadn't completely destroyed them, let's put it this way. And so then they've responded so they're making their way through life, but they've been a real victim. They've already worked through a lot of the feelings around being a victim. Or if they haven't even worked through them, they're at least really seriously familiar with them and sort of less alarmed by it or less triggered by it.
But they've got a response. As Dave on our call for the second interview described it, and we were talking about fear, and he used his hands to say, let's say the typical person has a response to fear within a band of tolerance and I'm currently holding my hands up maybe 6 to 8 inches apart. Whereas for him, that band of tolerance, because of his experiences, is so much wider. It's not that he doesn't feel fear. It's just that it's got to be extreme.
Yeah.
Fear to really come into play. So he can stay focused. He can stay. He can tolerate the swings and roundabouts of the markets, and he can stay on plan. And he's not going to go into panic mode as quickly as someone else. And he's not worrying that, hey, if this goes wrong, I'm going to lose my job. He's not affected by shame, which is an emotion which, so many people feel that drives their work in some way. If I lose my job, it's not the worst thing in the world. Whereas for other people, it is literally the worst thing in the world, the shame and humiliation which comes with failure, loss, shame. And the other side of that, the need to project your ego when things go great, that's not on his radar. He's like, hell, if I lose my job, it's it's just I've lost my job. It's not even registering on that scale of what could go wrong in life.
It makes me think a little bit of like special forces military training in the United States. I just happened to hear a general speak of it a few weeks ago when I was at this Leaders in Sports thing. And what happens with those people? They go through these unbelievable experiences that are so hard and so difficult, and they fail, and somehow they make it sort of kind of through. And what happens? It creates some sort of belief that they can tolerate it. So you give that person a difficult, provocative experience for the normal person who hasn't been through that, and the person who's been through the special forces training is like, this is nothing. It also makes me think, you hear this all the time from people who survive trauma or survive difficult things, that they do come out oftentimes on the other end with a greater self-confidence, sort of a greater resilience, sort of a greater knowing who they are.
Oh yeah, definitely no good. I mean, it's funny you say that, because by the time we've published this, we've got another episode coming out, which is planned to be before this. So hopefully it would have been recorded and published. And it's with a former Navy SEAL commander who is talking about, he practices mindfulness in the corporate world to help people cope with stress, anxiety, and fear much better. And it's such a shame my colleague Mark is not able to be on this call today, because that's his space. He does a lot of work in corporate mindfulness, working with people in that. He's an ex-broker who used mindfulness for 30 years to allow him to survive in that world. And I've just read a book also by Special Forces. I don't know if you've heard of him. His name's Ant Middleton. So he's a former British Special Forces
The name's
operative.
familiar, but I'm not going to...
Yeah. Well, he wrote a book called The Fear Bubble.
Oh, I've heard of that book.
Which one of my hedge fund clients went, he's currently in between jobs and he's traveling the world, and he said, Steve, I've just listened on Audible to The Fear Bubble. You have to go and listen to it. And he literally said, I won't talk to you until you've listened to it. So I downloaded it, and it's really interesting, but it's fascinating. And it's built around, he actually did a climb of Mount Everest as well.
Gosh.
So the entire book is built around fear and the different, types of fear we have, and, and how it strikes us. And of course, as someone who's served, in Iraq with the UK Special Forces, and literally, went on special operations into zones where he could be killed, and he had to lead that. He talks about fear, and then he talked about it in terms of climbing up Mount Everest, and actually climbing down, which was even harder. And moments where he was, on the verge of death.
Well, anytime you go through something that's really, really hard for you, and you come out on the other side, you've gained something. You've gained some awareness, some feeling that makes other things that aren't as hard a little bit easier.
And it becomes part of who you are. It shapes who you are. I mean, we had Anthony Crudell on the podcast this week. He says hello, by the way, because I heard your podcast interview with him, which was brilliant. And he was talking about his heart attack. And, I heard that one with you, and I thought that was really moving.
Today's the anniversary of that.
Yeah, 6 years. So it's something like that changes you, and it makes you as well. And almost when you talk about those fractals of yourself that come out in what you do, I guess we're formed by all these different experiences, and then that comes out in your behavior and how you are.
Yeah, so I'm going to connect this. I mean, we've all been taught that our brains are respond to stimuli, and it's really not so much like that. The best research, in my opinion, is that the brains we're unconsciously predicting. You're literally even unconsciously predicting the next word that's going to come out of my mouth. You don't know it. So there's this thing out there now about if you think you're about to take a sip of vinegar and it's apple cider, it actually tastes worse because you're expecting the vinegar. Like, you would think that the apple cider would taste better, but because you're expecting it, so that that's why I say recency bias is the default, because we're expecting things based on what we've learned. We're predicting feelings. So if you have more challenging experiences and somehow you survive them, you gain some belief that you can survive them, and you predict in a more optimistic way because you have experience. So I think that's the point of, when I worked for IBM, they had a military training model, break us to make us conform. And I luckily didn't pay any attention in the very first, no, I didn't pay any attention in the very first homework assignment. So I got it completely wrong because it was so simple. I didn't even think it needed my, it was so nonsensical. You had to memorize a sales thing. And I was like, I never heard memorize. So I went in and did it naturally and I failed. Well, you literally were at risk of losing your job. Anyway, so then they went on to, but I realized then that they had this cause people to fail to build resilience.
A quick thank you to the Society of Technical Analysts, who this podcast is produced in association with. The Society of Technical Analysts, the STA, are one of the world's leading bodies for the promotion of education and research into the field of technical analysis. You can find out more about their outstanding diploma programs, which are delivered at some of the world's leading academic institutions, or their home study courses by going to their website, sta-uk.org. Now back to the podcast. I want to move the conversation on just slightly. So we're both coaches. We both work with people in the world of trading and investing. And we both work slightly outside that world. So I work with leaders and executives and teams as well, not just in the trading space. And you work with sports teams and corporates as well, right. So I believe. And we both come from trading backgrounds. We've both been traders. So there's quite a similar path there. One of the things I'm fascinating about is, I've been doing this 10 years. I think you've been doing it longer. There is a resistance to having coaching out there in the trading world. And I can understand it because I was given coaching. I was offered coaching when I was a trader by my bank. I worked for the German bank, Commerzbank at the time, and they were trying an experiment. And my manager felt, Steve, out of all the people on the trading floor, is possibly the guy who's going to be most receptive to this. I was always curious about learning, growth. I was doing an MBA on the side. I was always reading behavioral finance. There wasn't much literature then on behavioral finance, but trading psychology, what there was on behavioral finance. So I was always trying to get better. So they offered me coaching, and I just went, whoa, are you telling me there's something wrong with me? That was my default reaction, and there was a sense also that I really don't need a shrink, so there was that reaction, and there was a reaction of, what are the other guys going to think about me and my team if they think I need help? And so I had all these responses going on, which I look back now and I kind of like, what was I thinking? But, my manager twisted my arm a bit and he persuaded me to go through the process. And actually, it was the best thing I ever did for my trading career. It just powered my trading over the, even as I was going through it, I was like, this is interesting, but I'm not sure, because there's no magic light switch. It's not you telling people what to do. It's the other way around. It's more of a reflective approach when you do it, and you think, and it creates, it catalyzes you to think about things. And I came out of it thinking that was useful, interesting. Is it going to change me as a trader? Possibly no. Possibly yes, I don't know. But wow, over the next few years and onwards, my career as a trader just went on this. And by then, remember, I'd already been doing it 13 years. it just powered me into, I would say I self-corrected, I recalibrated, I reset, I refreshed. The world started speaking to me in different ways because I was interacting with it in different ways. And my performance, which, had been good at times and at times I'd probably survived in those years, just went to a whole different trajectory.
Right.
And I look back after that and I was like, that was almost my inspiration, because my coach 10 years later said to me, planted the seed in my mind of me becoming a coach, which is how 10 years later now that I'm coaching. But I see the same dynamic at work, though, when I'm talking to people, when I'm trying to promote and market and sell what I do inside firms and funds. That same resistance I had is happening. I see it there, and it's I look at it, and I think trading is a performance activity.
Totally.
And a sports person would not for 1 second think about not having coaching. And in fact, the higher up you go in the world of sport, the more coaches and the more intense your coaching is. You wouldn't get a major league sports team tell their guys, look, just turn up next week, bring your kit, we got a game.
They do, however, have a similar sort of resistance to the mental coaching.
Right.
They tend to call it mental skills.
Yeah.
There are now, like in the U.S., it's mandated in the Major League Baseball. It's a certain amount is mandated in the NFL. I think in the NBA, but I'm not 100% sure. There's still, though, a potential shame in getting the help on the mental side, which is insane from a logic point of view, right? Because whether it's sports or trading, it doesn't matter. Everyone's looking for the slightest little edge, so you'll, eat tangerines, and I'm just making that up off the top of my head. You'll do any little thing, but yet you won't do this. Yet at the same time, if anyone talks about what's so hard, whether it's trading or sports, they'll say the mental side of it. They'll say the confidence. So the thing that basically everyone admits is the difference.
Yeah.
Is the thing that at the same time, people are afraid to ask for help.
Yeah.
So, why is that? It's basically because particularly men, but everyone really, are told, most men growing up in most circumstances are taught to not have any feelings and just be tough and power through. So they know the mental part is related to their thoughts and feelings, and they're sort of not supposed to have any.
Yeah.
And just be tough and power through. So there must be something wrong if they need help in that arena. They don't see that. They don't see the, we'll try to get the slightest little edge over here with this tiny little thing that might possibly help us, 0.005% of the time. But our biggest problem is always do we have confidence when we get afraid, when we're frustrated? But we're not going to get any help with that.
Yeah, and one of my early coaching clients, who it was a trader at an investment bank, and his manager said, "Steve, can I work with this guy? He seems to be struggling. He's someone who I think has got incredible potential, and he showed it, but he seems to have fallen behind the pace a little bit. Could I work with him?" And he said to me, we had a pre-meeting, because I always have a pre-meeting with someone. I want to make sure they're committed to it, absolutely certain they want to go through with it. They're not just being pushed into it against their own will. So we met, and we had a half-hour chat, and he said to me, "Look, if I'm honest, I don't need coaching. I know I can fix this myself. Just in a bit of a slump." And he said, "Well, why don't you need coaching?" So, like I said, I could do this myself, and I don't have any mental issues. It's all technical. There's some technical adjustments I need to make with my work. And I said, "Well, tell me what those technical adjustments are." And he said, "Well," he gave me some example of some trades that had gone wrong, or some acts. And I said, "Well, what in your sense was behind that?" And he said, do you know what? I just feared missing out on the move. And I went, sorry? He went, I just feared missing out. I went, you do realise fear's an emotion, yeah? And he went, damn, you've got me, haven't you? and we worked on this, he said, okay, I'm up for this, let's give it a go. And it was a brilliant, it took about 8 months working with him, meeting once a month, and we explored every aspect of how he worked and where these sources of fear came from and how they were overtaking him, and how he was lost in some future rather than being present for his work, which is so important, this idea of presence. And as we talked about it and we flushed it out and he became more conscious of it, suddenly he started working better and things started happening better. And the great thing for me was he's in a bank where, foreign exchange, FX in many banks has been slashed from maybe teams of 50 to teams of anywhere from 2 to 5 because of the rise of electronic trading. And at the time he was possibly 6 months to a year, this was 8 years ago, away from the door, and he's still there and he's thriving and he's one of the heads of trading, and it's such a great story.
Well, what people do not realize, and it's also not explainable or explicable from a scientific point of view, is that talking through what you're feeling and why you're feeling it gives you a way wider range of what behaviors you will act on, what behaviors you'll act out. And if you don't become conscious of the feelings and work through them, you will act them out. You will act out fear of missing out. So you'll either, you'll keep getting in the position or you'll stay in too long, but there is something about discussing feelings with another person who knows how to discuss them that causes you to be able to refrain from acting out until you've chosen that this is the feeling I want to act on. And therefore it's sort of like, why wouldn't everyone do this?
Yeah.
Because you can't, people can make progress on their own, and people do make progress on their own if they're introspective, but there's nothing like having the other person who's trained and knows, as I tweeted this morning, it's about asking the right questions. It's also about asking the right questions at the right time. It's about you being able to see with that client that, he thinks, oh, I had fear of missing out and I can fix that. And you're like, wait, that's the thing you said you don't need help with. Like, he couldn't see that himself, Well,
you don't. It's, when my coach at the time, Peter, well, not there, but 10 years later, Peter said to me, when I helped you, Steve, what was it I did for you? And I was a little bit surprised by that because I thought he knew. But, now I know that as a coach, you don't always know how you help people. You work to help them. But, it's not an agenda. I certainly don't work with an agenda. It's each individual's agenda. And you can trigger things for them that you're not even conscious of as a coach. So I said to him, well, metaphorically, a mirror was held up to me and I saw myself in ways I'd never seen myself before. I saw myself virtually. I saw myself as if I was, when you see other people in the trading room, you can see all their behaviors. You can also see their strengths. You can see where they're underutilizing those strengths or don't quite value them, or when they're overusing, where they don't see a weakness they have. And they can't see it themselves, and you cannot go up to them and tell them because A, it's not your business, and B, there's every chance they'll punch you in the face for sticking your nose in it. But the way coaching works, as I've always seen it, is he held up this mirror, and again with some exercises he did as well, which added to that. Suddenly I was, it was almost like I'd seen a video highlight, as if I was going through a sports thing where they show you, your hand. I don't know how you'd say it in baseball, but in cricket, we'd show you how you're holding the hand as you're bowling, or as you're holding the bat as the ball's coming to you, and how you're moving your feet. And they'll talk you through your innings. And only then, when you get to see it externally, can you really start to comprehend what's happening and start to make the adjustments.
Yeah.
And that's what happened to me in my trading. It was like, actually, I'm really good at this. I've got to use this more. And actually, maybe I'm not as conscious or confident in that area of my life. I mean, for me, one of the big things I came out was to reframe my relationship with risk. How I dealt with uncertainty. And
right.
In a sense, I was always trying to remove as much risk as possible from my trading. And I came out and suddenly I was like, now I've got to accept this level of risk and uncertainty and expose myself to it. Otherwise, I'm never going to make the sort of money that I need to make.
Yeah, and that's huge.
Yeah.
But what happens is, like, I'm always looking for the conflict the person doesn't realize they have.
Yeah, yeah.
They think they're doing X, but they're really approaching X in this way that's in conflict, but they don't see that.
No.
And so through helping them to see it, then they go, oh, like, because those unconscious conflicts have boxed people into places.
Yeah, I call that the behavioral gap. So that is the difference between what you intend to do, what you think you're going to do, or what you think you are doing,
right,
and actually what you are doing, which is usually very different. And
you can't understand it. Like, you're like, why do I keep doing this, or how come I can't? And you keep trying to use your intellect to tell yourself to do it.
Yeah. And one of the things for me that was always a great piece of insight when I was trading was I used to keep a journal, and I used to periodically look back, and I used to look back on it quite comprehensively, not just what did I do, but I'd also look at the market action at the price I would do it, and what I'd written down that I planned to do, and what didn't I do, and then why didn't I do that. And then I noticed this pattern happening again and again as I look back at my journal, and I started to become conscious that, Steve, you're some sort of a fruitcake. You keep saying you're going to do this, and you keep doing this instead. And I wasn't even conscious of it, not one iota. I used to just kind of in my head, in my head I was the greatest trader since the year. But in reality, I was a fruitcake who was making all these errors. And no one was telling me, and no one was pointing it out. And only when I looked back in my journal and started to really reveal it, that...
Yeah, totally. I mean, people need data sets on themselves.
Yeah.
Because I also find, and I actually found this with myself, like, I, for lots of reasons, was mostly the good girl who, did my homework, showed up on time, crossed the T's, dot the I's. And so I was really good about, keeping my stops and, following the rules 90-some% of the time. And when I did that, what I found was, I was getting a certain satisfaction out of being Miss Disciplined Trader. But I wasn't making near the amount of money I could be making if I wasn't just being the good girl. And so I started to realize, look, I need to, in a way, it's take more risks, but it's not strictly about following this exact set of rules. It's applying these rules to the price action of the market. And, my stops were often too tight as a result of being the good girl. And so I had this experience of finding out that also, I would actually tend to think I did worse than I did.
Right.
I'd look back over a week and I'd go, I did 50 trades, but it's that one trade that I took a big loss on, which I realize is counter to what I just said. But that's what made the difference between a mediocre week and a great week. 49 of these trades were handled really well, but that one. So then that changed how I felt, right? I wasn't so hard on myself, but that was looking at the actual data, because what we remember that we did and the reason that we think we did it is really probably not what happened.
It's interesting because, I'm hearing you say that, and I'm talking about what I was doing with the journal. And whilst the journal process wasn't catalyzed, didn't come from the coach I worked with, it catalyzed that reflection, which made me start journaling. So many behaviors that I started doing came from that process. And, I'm doing a little bit of selling there. The audience are out there, they're listening. I just say to people, get a coach. It doesn't have to be me. Get a mentor. So many of the great traders I speak to, and some of the really successful young guys who I know who are doing really well now, not just the older guys, they had mentors. And I read an article recently by a trader who'd done some research and data. He worked at a prop firm, and he'd looked back through their data, several hundred traders, and he'd found that I think of all the people at the firm, about 4.5% he deemed as being successful. When you just then looked at the data of those who actually had paid for some sort of mentoring, actually 10% had been successful. Now, that doesn't necessarily sound like a big jump, but basically he's saying that it more than doubled your chances of success if you invested in mentoring or coaching. And it does, it kind of makes sense. There's no guarantees. I always call coaching a call option. Your chances of success, S, you do a bit of an investment in it, your chance of success actually grows significantly. And it's the best call option you can have.
And I think the actual reason is that there's so much uncertainty and ambiguity, and there are so many ways to do this. I mean, so if you're trying to navigate all of that all by yourself, and you're trying to create more confidence or learn to navigate your fears better, and you just have to do that completely in your own head. Or if you have someone who's got a lot of experience with it, who can help you know where to focus, who can help you figure out what really works for you, then you have way fewer decisions to make, and you have more confidence in the decisions you make. So you're not wasting a lot of energy, and you're not living with anywhere near as much confusion than if you have someone that has an idea or so I once coached a Goldman Sachs trader who, by the way, his strategy was just try to break even every day. He went into the office every morning, I am just breaking even. Because he knew that if all he ever did was break even, there were going to be 2 or 3 times a year that the market did something crazy, and he was going to be ready those 2 or 3 times a year. And I thought, how did he learn that? He learned that because someone at Goldman Sachs told him that was the right way to do it. So then he felt comfortable doing it that way because he had someone who'd been successful. If you just try to figure this all out without that, that's problem one. Now, there is problem two of if you get bad psychological advice. So, you can have someone telling you, the right technical way to do it. But if they're telling you get to the place where you have no emotions about it and you can't do that, that's going to impede your progress, But in the Goldman Sachs guy, he was given confidence that would work. So he felt confident that would work. And then he didn't feel guilty about just breaking even every day because he wasn't pressured to make money. So he believed that style would work. He had confidence in it, and then he was able to execute on it, and then it did indeed work, which increased his belief and increased his confidence. And I convinced him, by the way, that how much sleep he had mattered. And so he was one of these guys that had to also do the client meetings, and be out to dinner. And so he came into the office one day and he was exhausted from a client dinner, and he decided he wasn't going to trade. And it was a choppy day, decided he wasn't going to trade that day. And then in the evening, 4 or 5 o'clock, the market started to move, and he could see that everyone around him was totally chopped up. And he was like, wow, I've saved my psychological power. I've saved my capital. And he was ready to pounce. And the next day was one of those huge breakout days. And he like made more money in that day than he'd ever made before. And it was literally a result of him deciding not to trade because he was so sleepy and tired and that he knew it was choppy.
It's this is the other side of it, because there is a physical side to trading. We are, and again, I suppose we're in your space here, but we the mind is fascinating. And again, if Mark was here, he'd be coming in talking about this now, because this is his space. We could talk about thinking right, but that is an organism which needs care of. It's like a muscle, and
totally.
If it's tired, it's not going to work as effectively as it does. If we do things that we put poisons into our body, it's not going to work as well. If we don't get the right amount of rest and relaxation, it's not going to work as well, as you said there. And against that, you've got this other side of it where people are fear of missing out, and they need to be in there all the time, and they're just draining the energy from it.
When I first started doing this, I had this idea of just telling traders they didn't have to take the emotion out of it because that's what the brain research said, and it wasn't going to work anyway. And, so how about we try to, like a judo karate kind of thing? How about we try to work with these emotions, and make them our friend? That was like my initial idea. But then as I started to really think about it in a way I had never done when I was just trading myself, but when I started to try to explain it to people, I said, wait a minute, there's a thing that's like psychological capital. That's a separate thing. And you can, number one, acknowledge it exists. And then number two, work with it in some sort of organized, systematic way. And I mean, one of the first workshops I ever gave was about, in reality, there's a thing called psychological capital. And if you work with that, you treat it like your cash capital, your results are going to be going to have completely different results. In any field, there's been this argument on Twitter lately about, psychology isn't as important. You need to learn how to trade, blah, 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 blah. And if you just have the right psychology, that's not enough. Well, first of all, you can never have the right psychology for trading unless you've learned how to trade. So it's illogical from that point of view. But it's also true, you can have the best system in the world, and if you don't have the psychological capital, I mean, they go hand, and you have to have both. And that's true in any field of expertise.
Yeah, you have the technical skills, and then you have the mental skills. I don't know if you're familiar with Dennis Gartman's rules of trading.
I've heard of them. And, Dennis is a friend of mine. We grew up not far from each other in Akron, Ohio.
But the one that always stood out for me was number 3, which is that capital comes in 2 varieties, mental and that which is in your pocket or account. And of the 2 types of capital, the mental is the most important and the most expensive of the 2. And that to me just summed this whole argument up. And I use a reference when I'm working with people of the inner game and the outer game. And I don't call it psychology because it's not. It's I think psychology is really a name for a study of a subject. It's so many things that are more than that. And I for one, I'm not a fan of teaching people the psychology of trading because, to me, it's like teaching people, getting people who want to learn how to ride a bike to read a book on how to learn to ride a bike before and then hoping that will do it. And actually, you learn to ride a bike by practicing, falling off, feeling it, and it comes from within you. And and that to me is the inner game. So the outer game is the technical side of it. It's what you do. It's the tangible aspects of anything. And then there's the inner game, which is the intangible aspects of it. The internal aspect. And the inner game is, as you go back to what we talked about before. The inner game is the hardest part to learn. It's the hardest part. It's intangible. So most people don't do it. They focus on the outer game, the tangible aspects of it, which are, they're the technical aspects. They're relatively easy to learn. We can learn how to analyze charts. We can learn what the fundamentals are, what the news is. you know, what the flow is within the market, you know, how to analyze data, you know, even how to build a system. You know, that is all the tangible aspects. It's the inner side that is so hard. And that's where a coach will help you. But that's where most people, they won't invest in that. And yet that is where the edge comes from. The true edge, to me, comes from that side. And when every great trader I've ever met has been strong on their inner game.
Well, yeah. I mean, you can't, with the exception of a little luck here and there, which is so rare. It's in my world, it's not even worth, acknowledging. But you can't execute unless you have the feelings that help you execute, or you're able to tolerate the unpleasant feelings.
Yeah.
Like, you just can't. So, but you can learn to work with your own inner game in a different way than you've ever been taught. I mean, I had a wide receiver. I've become friends with a former wide receiver for the Cleveland Browns. And he's like, look, Denise, everybody in the NFL is really, 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 really good. The only difference between those of us who really make it big in the NFL, injuries aside, and those who don't, is inside our heads.
That's true. I tell people, I see a lot of mistakes new traders make is, they decide they want to become a trader, and they decide on day one, they read a few books, they practice maybe on a simulator for a while, and they think, I can do this. And I say to people, I think it's 5 or 6 years, trading is a skill. It's not just something you do, and when you're walking out there, you're coming up against millions of other people. Many of them are very good. Many of them have been doing it for years, for years and years, and you're up against them. And they're going to collect from you because you haven't developed those intuitive skills yet. Yeah, you've got a lot of rules, black and white, don't do this, do this. But the skill comes from learning to trade outside those rules. Having those rules as a backup. I call it the grey. The black is what you don't do, the white is what you do, and the grey is everything in between. And that's where you have to learn to become a good trader. And that, learning the grey for me takes, I wasn't a good trader till 13 years into my career. I thought I was at times. I had some luck, I had some good luck, bad luck. I survived, I was fortunate. I was in a bankroll, so I was getting mentored, I was getting paid, but I wasn't as good as I thought I was. And then later in my career, I finally got good at it. And that's when I felt that I could come in every year and, with a very high degree of certainty, as long as I stuck to my rules, stuck to my principles, I would make money at the end of that year. And I did. And when you have that sort of confidence, it happens. But, I'd probably say make the same mistake as these people if I started now. I'd probably think, this is easy. Anyone could do it. And you get a bit of luck. You get a bit of luck at the beginning, but, you get good luck, you get bad luck. And I just say to people, look, don't put all your money into it. Don't think about earning in the early stages. Just, a little bit like your guy, just survive, and keep learning and learning and learning. And somewhere around about 5 to 6 years, and I know people have said, it didn't happen till 10, 11 years, and you may be lucky enough that it happens, especially if you've got a great mentor, someone you can learn from. It might happen in the first 2 or 3 years, or if you've had some experiences early in your life which put you in the right place,
right?
Benefit. But I just say to people, learn. Don't expect to earn. If you're going to have to earn a living off this in the first couple of years,
it's impossible. It's impossible. Like, I think people should, they should first just see if they can learn and break even against the market.
Yes.
Then they're still going to have all of whatever their costs, their commission costs are, and their platform costs or whatnot. But it's like any business. You're just, you're trying to generate sales. So you're trying to break even against the market. Then see if you can start to cover your costs. Then see if you can make a little bit, then see if you can make a little bit more. But it's not, the difference is, no one is going to go out on the field or no one's going to go out and play golf with Tiger Woods that doesn't know how to golf, or go out in the football field with my friend the wide receiver. But in the markets, we can all just we can open up an account, put some money in, and go out in the field, and we don't realize what we're up against.
We got Jim
We would never do that.
Yeah.
You'd never do that. No sane man would do that because he'd know the other guy was going to make him look ridiculous.
Well, you might have Jim Simons on the other side of your trade. It's ridiculous. It's like walking into a boxing ring and having Mike Tyson facing you on day one.
Yeah. Although, what, I do want to say something about Jim Simons, having read that book.
Yeah.
The thing that I think people need to realize, we've had this viewpoint of him that he's like this, E equals MC squared of the mystery of markets. And they're right less than 51% of the time.
Yeah, it's incredible. And you know what? I mean, I'm a huge fan of his. But, he was someone who didn't start making it. He'd been done it. He did it for 10 or 12 years. He had some success in that time. But he didn't crack it, for over a decade. And he had the most brilliant PhDs with him, and he had a base where he could, he had a nice income behind him. Even when I look at, what they do, and I spoke, we had Greg Zuckerman, who wrote that book, on the show
right.
a couple of months ago.
I know.
And he said, they barely win more than 50% of the time, but their model is so brilliant. And I have a couple of guys who are quants who I work with, and they've got models that are very similar. And, you have to, when I run as a trader, I probably run 20% of the time, but it was all about risk management for me. It's looking for the outsized wins against the small losses, and hopefully balancing that constant.
Another thing people need to do is figure out, what suits them.
Yeah.
And people tend not to do that. They go find someone they can learn from, and they're trying to learn their system, but what do you really believe about price action, and why does it move, and what makes it move, and what's the right metaphor, and how does it make you feel, and getting so that you feel like you're interacting with it in a way that makes sense to you. And people just wildly skip over that step. Then they're buffeted about. Then it's easier to be buffeted about if you don't know what your strategy is, really.
Well, it's another one of what I call the sort of superpowers of great traders, is that they all work congruent to their personality.
Yeah, exactly.
And I use the example of sports again. That if you're built powerfully, you don't want to be a marathon runner, because as hard as as hard as you can train and learn, those skinny Kenyan guys are going to beat you every single time.
Right.
In the big event, you're going to have to try twice as hard as them. And conversely, the other way around, you want to go into the sprint event, because that's going to suit your body shape, your body style. Whereas those guys are going to struggle. And I do work with personality tests where I've seen this play out so often, where people of a certain personality, they trade in a certain way because they've got that. It's another one of those edges. You have to have multiple edges, and one of them is working congruently to who you are. Then it's a little bit easier for you, and right responses for that need, and you're going to be, you're going to be more resilient because you're working in a way that works with who you are.
Yeah.
And not everyone, like you say, people take a system from someone else who's developed it for themselves, and it's built around who they are, and then they expect it to work for them, and of course it doesn't.
Yeah, it's also why, by the way, you can never take a trade that's somebody else's trade, because you can't execute it anywhere near as well as the person who's traded initially is. You literally don't have the same feel for it.
Yeah. That's
it's not an easy business.
Yeah. Well, listen, I'm conscious of the time, and we've gone over by. Look, we took the hind legs off a donkey there, Denise.
No problem.
It's a subject I know you're really passionate about,
Yeah.
as am I.
Yeah.
And you're doing some work in this field at the moment. I think you're running a boot camp or an offsite for people to join. Do you want to perhaps?
Yeah, we're doing a workshop in Canada well, I guess by the time this runs, it'll be really close to it, but it's April 6th to 8th.
Right. Okay.
And I really am going to try to deliver like the best that I know of this to a small group of people. I do think you might be getting my dog barking in the background now.
That's okay.
I can hear.
My cat's sleeping here in my office with me at the moment, so
Yeah,
he's a lot quieter.
they tend not to bark.
So how can people find out about this?
Well, there's a page on our website under workshops.
Yeah, and your website is
the rethinkgroup.net.
Okay, so or they can Google you or the Rethink group, and it'll be on there.
Yeah. Rethink, by the way, is like meant to be rethink thinking.
Right.
We actually had that as a like trademark at one point, but I think I let it go because we never used it. But that's where the name came from.
And I should imagine going to that workshop will be hugely valuable for anyone looking to advance or develop their performance as traders.
Well, I'm going to do my darn best to make it that way. I mean, in a perfect world, I'm going to coalesce everything I know about this subject into those 9 hours. I'm also going to do a one-on-one with people 2 to 3 months out. So it's not like they come, they think it's great, it helps them for a few weeks, and then they forget about it, or they can't keep doing it. I felt like that was an important thing to do.
So there's an embedding process as well.
Yeah, give people a chance to know they get to talk about it with me after they've tried to work on it for 2 or 3 months.
That's fantastic.
I felt like that's important.
That's fantastic. So again, is there a title to the workshop, or
is there what? Raise your game, actually.
Right. Okay. I think you could just see one of my cats just his tail is.
Oh yeah, he heard you talking about it.
Yes. Well, you know what? I mean, if I was a trader, and I'd seriously be looking at, at that idea. And where about? I mean, Canada must be beautiful. Where about in Canada?
In Banff.
Right.
In on a ski mountain.
Wow. So is there some skiing involved as well?
Hopefully. It should still be good in Canada. They are open until March or in May. What am I talking about? So this is the first week in April. It is the week between Palm Sunday and the Christian Easter.
Right.
So, some people, the idea was that, people might have a break or might be able to bring their families or whatnot.
Just jumping in the podcast at this point, just to say that obviously with the coronavirus situation going on, this workshop that Denise is talking about has been postponed for now until the end of June, if you are still interested in becoming part of it. That sounds brilliant. And as we say, people need more of this. This is the stuff that is so hard to get anywhere else. You can't really get it from, you can read about it, but if you're really going to work on it yourself, it needs to be done in person.
Yeah.
Well, brilliant. And again, we're about to finish this podcast. I don't know if you've thought about it, but to all the people out there listening, if you could give them one nugget, one piece of advice, whether they're a struggling trader or whether there's a trader who's doing well and wants to improve and get better. I'm putting you on the spot here now, I can see. What would it be?
Well, my piece of advice is learn to answer the question, what am I feeling and why am I feeling it, accurately. But it's simple to say, it's not easy to do. If you have the accurate answer, it gives you a way greater choice of the trades /actions /behaviors you want to take. And it works in all realms of life. So, it helps you navigate fear and anxiety. It helps you navigate frustration. It helps you know what your intuition is versus your impulse. It's like an actual, it's the practical piece of like an inner game. And so few people are doing it that it can be a huge edge.
Well, that's a gift. I think that's a gift from you.
Thank you.
Denise, thank you so much. It's been an absolute pleasure and an honor to have you on the podcast. And
thank you for having me.
I think our audience will be absolutely delighted with this.
I appreciate that.
Thank you. If you are interested in our powerful trader performance coaching programs, these are delivered by myself, Stephen Goldstein. I have been coaching traders at some of the world's leading trading and investment firms, as well as private traders, for over a decade. Before that, I worked for almost 25 years as a trader at some of the world's leading investment banks. The programs I deliver help people unleash their potential as traders and investment professionals and facilitate the development of the key mental aspects of trading performance, which provide such a vital trading and investing edge. The AlphaMind Trader Performance Program is based on these programs I've been delivering to traders and investment professionals at some of the world's leading firms. For more details on the AlphaMind Trader Performance Program, please email info@alpharcubed.com. That is the word alpha, the letter R, and the word cubed.com. Also check out our blog page by Googling AlphaMind Blog or going direct to alphamindblog.blogspot.com. There is a link at the top of the landing page about the AlphaMind Trader Performance Coaching Program. If you have enjoyed this podcast, we would be delighted if you can rate and even review the show on iTunes or whichever service you used. Ratings help raise awareness of our show to a much wider audience. We appreciate these are very strange and unsettling times in so many ways. In response, we are planning to launch some free webinars over the next few weeks with a view to helping people cope with the stress-inducing anxiety of the coronavirus, quarantine and isolation, as well as worrying about their loved ones, and also for those who have been struggling and challenged by the extremely volatile and wild financial markets of the past few weeks. We will be announcing details of these on our social media pages, so please keep an eye out for these. Our social media pages are predominantly on LinkedIn and Twitter, where myself and Mark will be happy to connect with you. On LinkedIn, it is Stephen Goldstein and Mark Randall. We also have an active LinkedIn group called the AlphaMind Group. You can also follow us on Twitter at AlphaMind101 is my handle, and Mark's is at AlphaMind102. As mentioned before, we also have a blog, alphamindblog.blogspot.com, and you can find out more about us on the page alpha-mind.net. Finally, once again, thank you to the STA, the Society of Technical Analysts, who this show is produced in association with. The STA are an incredible organisation who provide powerful home study courses and diplomas created by some of the leading figures in the investing industry. As a non-profit body, they go back over 50 years and are a hugely trusted provider of trader education services. We wish you and your families well, and please stay safe.